All right, first video of 2026, and we're going to be on the charts today. We're going to be going over inversion fair value gaps. So to start this video, we're just going to go over what is a fair value gap. So a fair value gap is a 3-candle pattern like this. I'm just going to draw it on the charts right here. But essentially, what a fair value gap is a 3-candlestick pattern where the wick of this top candle here, so the wick of this top candle, of the bottom candle, and the wick of the top candle don't cross over each other, and they leave an imbalance in price in the center candle. So you see right here, we have the bottom wick and we have the top wick, and there is an imbalance in price here. So that means that price went to the upside so quickly that it left an imbalance in price here through this second candle. So when it with fair value gaps, what we're expecting to happen is that we get a retracement from this candle, fills this fair value gap, and then continues higher. So price tends to draw back to these imbalances in price and then continue higher following the imbalance being filled. So we can just look for an example of this on the charts. And yeah, right here we can see we have a bullish fair value gap here, right? The wick of the lower candle and the wick of the top candle don't cross over this middle candle. We see price retrace into this fair value gap here, continues higher, retraces again, and then continues higher. So we had a respected fair value gap here, and then obviously there are going to be hundreds more examples that you can find on the charts on every time frame. I mean, even right here, right? Price retraces, closes inside of this fair value gap, and then continues lower to the downside. So we could have been targeting here, we could have been targeting this low here, we could have been targeting here, this low, there are equal lows here, so we could have been targeting there. But yeah, if you wanted to enter from a fair value gap, that's what you would do. So an inversion fair value gap is when price crosses below the fair value gap. So if price, right, if we have the next candle and it closes below this gap, then that is called an inversion fair value gap, because the fair value gap failed, so it is no longer a bullish signal. So we're not going to be looking for longs, we're actually going to be looking to take shorts from this inverted fair value gap. So the next candle we open here, we close below, and now we're going to be looking to take shorts from right here. And then in a bullish example, if we had a bearish fair value gap and price closed above the fair value gap, then we're going to be looking for longs from that fair value gap. So how can we use the inversion fair value gap to take entries? Well, if you are on a chart and you're looking for shorts and you see a fair value gap here and you see the third candle close below, or the fourth candle close below this fair value gap, well, this becomes an inversion, and now you can take a short from this inversion fair value gap. Once this candle closes, you can set your stop loss above the high of this candle, and then you can target 1-to-1. You can target lower. You can target the closest draw on liquidity. You can target, sell side, buy side. You can target equal lows. You can, whatever your targets are, you can use the inversion fair value gaps to take entries from those inversions. So I'm going to give you guys an example on the charts right here. We see here, we have a fair value gap here. We get a candle closure below this fair value gap on the 1-minute chart. So if you wanted to wait for the candle to close, you could either take it from wherever you're comfortable when this candle crosses below the fair value gap, or you could wait for price to close below. We have another fair value gap here. You could wait for price to close below this candle. We see that price closes below this fair value gap here and this fair value gap here. So we have two inversion fair value gaps here. We enter our short position here, stop above the high, targeting liquidity resting here, here, here. So we're just gonna, if we want to target 1-to-1, this is 1-to-1 here. If we want to target 1-to-2, 1-to-2, we have resting liquidity here. If we want to target lower, we can target here, 1-to-4.7, so almost 1-to-5. And if we were to take this trade, we would have gotten almost 1-to-5, 1-to-5 R on this trade here, if we were to target this liquidity here. So obviously, inversion fair value gaps can be an excellent indicator of where to take entries. If we want another chart example, we have right here, fair value gap, barely. All right, I'll find a better example. Okay, we have fair value gap here on the 1 minute. Price closes below this imbalance in price. So we could have entered from here. So we want to enter from this candle. Price closes below. We set our stop above this swing high, targeting liquidity resting here, targeting liquidity resting here. We could target liquidity resting here. We enter from the inversion, and price continues lower. What confluences can we pair this with? We have change in the state of delivery right here. So if you want to mark this, we have a change in the state of delivery here. We have bearish fair value gaps forming here. So you could take an entry from this bearish fair value gap. We could take an entry from this bearish fair value gap here. Right, these bearish fair value gaps, right, because we were previously in an uptrend, and now we flip, we have a change in the state of delivery here, high resistance liquidity above here, and we have a bearish PD rate supporting price as it continues lower, and obviously we just dumped this whole day all the way down to here, so you could have got an insane risk reward on that trade. So what did we go over? Fair value gaps are a 3 candlestick pattern where price leaves an imbalance that is likely to be filled. What is an inversion fair value gap? It is when price fails to or closes below or above that fair value gap or that imbalance in price and then continues in the opposite direction. And how can you use it? You can use it to find entries, and you can use it as a supporting PD array to support price lower. So that's going to be it for today's video. If you guys have any more questions, you guys can either DM me on Instagram or leave a comment. And yeah, that's going to be it for today. First video of 2026, but we're going to have, a lot more coming out this week and a lot more coming out, in the future. So if you guys want to see more of that, leave a like on this video, or, just let me know what you guys want to see next. So I hope this is helpful. And yeah, that's going to be it.